Before we begin, I'd like to say a quick disclaimer. This content is not intended to provide and should not be relied upon for investment, tax, legal, or accounting advice. Nothing in any presentation shall be construed as a recommendation or offer to sell or solicitation of any offer to buy any securities. Hello and welcome to another Brick by Brick episode. My name is Max Chigai, and I work as a dealing representative at Parvis. Parvis is a publicly traded exempt market dealer. You can think of an EMD as the middleman that connects the investors to the developers or fund issuers. And what makes us different at Parvis is we function as a technology first platform rather than just a brokerage. So while standard exempt market dealers act as the middleman, Parvis has built a digital ecosystem designed to solve two biggest headaches in private equity. Those headaches are liquidity and access. So we provide a secondary market for investors to list their holdings for sale for other investors without exiting the position and incurring early redemption fees. And the other headache is access to direct deals. While most investors are stuck with blind pool REITs, where you don't exactly know which buildings and projects you're invested in, on our platform, you can see the specific project, the developer's track record, the documentation like the OM, and the specific location. Now, in my role as dealing representative, I help educate clients about the different offerings on our shelf and determine which investments will be best suited for their financial situation. Today, I am joined by the team here at Crystal Creek Homes, Jason, who is the CEO of Bridge Advisory, and Justin, who is the founder and CEO of Crystal Creek Homes. Thank you guys for joining. And I'd like to start off by getting to know you a little bit. Maybe, Justin, you can talk a little bit about your background and what made you start Crystal Creek and the journey so far.
Sure. I guess, depending on how far back we want to go. I mean, I was a tradesman in the Calgary area for a number of years as a cabinet installer. And then there was a incident that happened that put me out of work for about 4 months in a cast. And so started to think about life a little bit differently and started to think, maybe I should look at doing something else. And I was about 35 years old at that time. And that's when I decided to start a home building company, and I called it Crystal Creek Homes. And we started from very humble beginnings of just doing one house in our very first year back in 2004.
Mm-hmm. And what kind of a builder are you? Like, what type of builds do you specialize in?
Well, being a cabinet installer, I was very used to working in high-end estate homes. And what I found as a new builder, it was very difficult to find land opportunities, especially with our limited resources that we had at that time. And so I automatically became a high-end estate builder, which was the only available parcels of land that one could purchase in order to build a home as a new, fresh home building company.
Wow. And when did you start? Was that back in, you said 2004? Or?
So it was in 2004. Our very first house was a customer-driven home. And from there, the company expanded, and it was kind of starting off with one house and then two and then four and eight. And quickly it grew to a very sizable number to where we're no longer a small builder.
So it's been 20 plus years. How many homes have you built to this day?
Well, we'd be well over 1,000 homes that we've built, well over $1 billion worth of real estate transacted through those years. I think our record number was a little over like close to 220 back a few years ago. And so, kind of trying to maintain that 150 mark per year is where we'd be situated now.
Okay. And what kind of opportunities are you seeing right now in the markets? Are you invested in a certain geographical area, or are you looking to expand to other areas?
Well, it's interesting because, as I talk to people across the country, very different circumstances depending on where you are. Whether it's in Ontario or BC, things are, certainly a little more negative than they are here in Alberta. So we really feel fortunate to be in the situation we are here in Calgary and in Edmonton. Calgary is where we're mainly focused, and what we're seeing is that, again, depending on even geographically where you are within the city, It can be very hot or kind of average. But I would say overall, it's a very balanced market where people have an opportunity to do a little bit of negotiating. But as a builder, we're still moving product. We're still seeing good margin. Our tradespeople are very happy. They're able to keep up with the production that we're currently outputting. And so currently right now, I would call it a very balanced market where we're at.
Okay. And the houses that you've built have been primarily in Alberta, is that right?
That's correct. Yeah, we've always been Alberta based and currently have no desire to move outside of the province.
Okay, very good. As the company grew and evolved and the pipeline got bigger, kind of how did Crystal Creek Homes handle the capital requirements, both on the equity side and on the debt side of the capital stack?
It's a great question. And, in the early days, you started approaching friends and family and maybe some of your sub trades in terms of, hey, we have an opportunity to buy some land and would you like to be an investor? And it was all very much word of mouth. And some people would say done not compliantly back in the day. As we became a little bit more sophisticated, we had an opportunity to work with a family office here in Calgary, the TriMac Group, and they were really instrumental in really showing us the template of limited partnerships and how that works and what investors are mostly interested in. And so that partnership lasted about 7 years, still on very good terms with that office today. I would just say that money can become very expensive. And so we found alternate ways of working with investors that allowed us to continue to grow and put little extra money towards our bottom line in order to help facilitate that growth.
And this kind of leads us into the mutual fund trust, I guess. So, what led you to the creation of the mutual fund trust, and what's the vision for the fund as it relates to the future of Crystal Creek Homes?
Once we got through our relationship in terms of that family office being our only investor, we started to reach out to our network of individuals that we knew, people that had built with Crystal Creek Homes were investors. And so we started to build a network of investors, and we often heard how, I wish it was RSP or TFSA eligible. And so we didn't really have an opportunity for people to be able to do that. And so once the idea of creating a fund came into play, we really saw, this is a growth opportunity for Crystal Creek Homes to create a fund. It gives our investors an opportunity to use their RSP and TFSA accounts. And the way that we created it was with our investor in mind to be able to diversify the portfolio slightly so that it was a little bit safer, so that you weren't just investing in one product in one area of the city, but investing in a number of different projects, really creating a consistent blended return for our investor group.
Okay, very, very good. Jason, I've got a question for you. So the
Absolutely.
fund offers strong income alongside a growth component. How does the structure of the fund allow for both sides of the equation to be achieved?
Absolutely. Thanks, Max. Yeah, Crystal Creek, as Justin mentioned, the investment itself, the mutual fund trust, is a pooled investment. So it has a number of different projects that it's currently invested in across Calgary and a couple up in Edmonton still. And all of these projects are at different stages. Each project in general is about a 3-year timeline from the beginning all the way through to the final sale of the last home. And throughout that life cycle, there's different cash flow generation components. We collect revenue through the collection of deposits in the early sales cycle. And then as homes are delivered to the end user, we collect obviously the sale proceeds as those homes are delivered as well. So having a pool of projects that are at different phases, at different levels of cash flow generation, pooled all together, it creates consistency within the fund structure itself. There's constantly cash flow turning through the fund. That's what sustains the 9% distribution that we pay out to investors. It's currently paid out on a quarterly basis, although we're about to make a change with this turn of the OM to make that a monthly pay structure. And that 9%, it's sustained by the sale of the homes, the collection of deposits. And then additionally, any distributions that are not actually distributed out to the unit holders are reinvested into new projects. So there's a compounding effect of growth within the fund as well by reinvesting those undistributed distributions back into new projects. We create growth in our net asset value or the fund value, which creates a growing component in the value of the investment that investors have in the fund over time.
Right. And we could provide a specific example. In the last year, you guys had a NAV increase, I guess. So that provides an additional income for investors, right? If they were to sell their shares, they would get a higher price for each share.
Unit price started the year at a $1 price point and has increased throughout the year to 105.55. So there was about 5.5% growth in addition to the 9% distribution that was paid out to investors.
Wow. So they're getting 14.5% there in that 1 year.
Yeah, it was a great year.
That's very good. Crystal Creek has demonstrated a strong commitment to investor success. How do you think, Jason, the funding agreement would work between Crystal Creek Homes and the Mutual Fund Trust?
Yeah, that's a great point to bring up. This is a unique feature. This is something that Justin agreed to do out of alignment with investor interests. As funds get up and running, there are often upfront expenses that early investors often bear the brunt of in most fund structures. These expenses include things like accounting fees, legal fees, operational expenses, administration expenses. And often in the early stages of a fund's growth, while you're assembling a portfolio of assets and building up your equity value, the expenses of those fixed expenses can really impact the overall return of the fund. This is something that Justin saw early in the history of the fund and just decided that wasn't necessarily fair. So they put a funding agreement in place where Crystal Creek Homes, Inc., so the parent company, the home building company, is covering all of those expenses on behalf of the fund until the fund can deliver a rear-facing annualized return of at least 10% from the very first investors that ever got into this fund. So the fund's been around for almost 5 years now. We've got a bit of a history. Some of those early investors haven't realized that 10% total return just yet. So Crystal Creek is continuing to cover those expenses. That applies to all investors, not just the original ones. But all investors in the fund are realizing the benefit of having those expenses covered, which basically just means the performance of the projects is directly representative of the return to investors. We're not having any cash drag or expense drag that's pulling down the overall return, while Crystal Creek Homes is covering those expenses.
Wow, interesting. And what was the motivation behind offering something like this?
Well, maybe I can speak to that. It's really long-term thinking, long-term success of the fund. You know, when we think of those early investors that supported Crystal Creek in the very beginning, it was frustrating for me to see that our projects were doing really well, but all of the returns that were coming to investors were being wiped out by accounting fees, audit fees, legal fees, all of those sorts of things. And so from a frustrating standpoint, projects were doing well, but the fund was going down in value. We decided to maintain a unit price of $1 regardless of what the fund value was in those early days to honor those original investors that came in. And so it was really long-term thinking to say Crystal Creek can bear this burden until we have built up enough of the reserves within the fund that it can maintain a 10 to 12% return for investors on its own. And so it just needs a little bit of petrol to kickstart things. And certainly that's what we entered into about 2 years ago now, I think. And we've certainly seen the results of doing that, now being over $1 on our net asset value and starting to see that growth. So excited to see what's happening in the future. And it also, you know, helps with our even current team here at Crystal Creek Homes as they invest into the fund. They're starting to see the results and they're getting excited about where their own money is being invested.
Mm-hmm. Well, I think now it's a good way to kind of transition into the actual investment itself. So maybe, Jason, you can talk a little bit about the mutual fund trust.
Yeah, absolutely. The mutual fund trust, as mentioned, it's a pooled investment. So it gives investors exposure to all of the projects that Crystal Creek is currently doing across Calgary and with those couple of projects still up in Edmonton. The cash flow component is obviously a big part of why people invest. Receiving that 9% distribution, again, currently paid out quarterly, but moving to monthly here in the next few months. Total target return, as mentioned, with the funding agreement in place, we are targeting a minimum 10% annualized return for all investors before that funding agreement starts to wind itself down. So that's our stated target return right now. As Max mentioned earlier, our total return this last year is about 14 and a half. So we've significantly exceeded that target in the last year. We do have a distribution reinvestment program. So if you're an investor who might like the appearance of that cash flow, you can see it showing up in your account. You can see that value growing over time, but you're not necessarily at a stage where you need to withdraw that cash. You would rather compound your growth over time. You can automatically reinvest those distributions. It just rolls into new units of the fund and allows your investment to grow and compound over time. As Justin mentioned, the investment is RSP, TFSA, LIRA, RIF eligible. Any of the registered accounts that you would be looking to use, you can use in this fund. So if you're looking to reallocate existing funds or make new contributions, either way you can do that and participate with Crystal Creek. The distributions to cash accounts. So if you're not using one of those registered accounts, you're a corporate investor or an investor using an open cash account, not a registered account, the distributions are currently 100% return of capital. And that's a pretty significant tax advantage. The distributions being considered a return of your own capital means that they are not subject to income tax. So you're not paying any tax on those distributions. What happens instead is those distributions reduce your adjusted cost base in the fund. And when you exit the fund, you will pay a capital gain on the difference between your adjusted cost base and your exit proceeds. So as the fund value grows over time, obviously the growth would be subject to capital gains, but also the distributions would also be subject to capital gains at the end. Now, the benefit is that capital gains are taxed at a lower rate than income, so there is still an advantage, and you're deferring that taxation until exit. Speaking of exit, there are early redemption fees that apply for the first 3 years that you're in this investment. So we are looking for medium to long-term investors. At least a 3-year time commitment gets you through that early redemption fee schedule. After the 3rd year, there are no penalties that apply. You would just redeem at full net asset value at that time. And the minimum investment is $10,000.
Okay, very, very informative slide there. Okay, well, Jason, what do you think is the future here for Crystal Creek Homes? Where do you see it heading?
I mean, I'm so excited for Crystal Creek and for where it's going. Justin's got a great company, great opportunity in front of him. He's assembled a tremendous team, and the pipeline is so exciting. Some of the projects that are coming online are in some of the fastest growing communities in Calgary. There's endless opportunity. And as this fund continues to grow, it just provides more resources for Justin to be able to take on the projects that he's consistently offered. He has a tremendous reputation here in Calgary and up in Edmonton as well, although we are focusing primarily in the Calgary market. And the relationships with those developers, as they continue to grow, the opportunity just continues to grow. The pipeline is really strong, and being able to take advantage of the great opportunities as they're presented through the funding mechanism of something like the mutual fund trust just allows the company to grow that much more quickly.
Mm-hmm. And maybe we can talk a little bit about just in general investing in private equity and compare that to, let's say, public markets, for example. Public markets are very volatile, and if you were to do a comparison, a company like Crystal Creek Homes, their revenue is much more stable and predictable, and there's much less fluctuation in the returns, right, Jason? And because of that, what do you think the benefit of having some private equity into your portfolio? What does that do for diversification and risk?
For me, it all comes down to the fundamental drivers of the investment performance. With Crystal Creek, it's not sentiment driven. It's not based on what someone thinks the share price is worth, what they're willing to pay for it on an exchange. The performance really comes down to the execution from the team. As they deliver homes, they generate profit, they maintain margin, they keep their expenses under control. That all delivers return for investors in this structure. Justin has a great long-term track record, over 20 years doing this now. The company's growing year after year. The sales pace is growing year after year. There's great new projects online, really good margins that are being maintained, great relationships with the trade base. And Justin, you can speak to the predictability side of this. You have a forecast over the next 12 months. You already know what's coming in based on the projects that are already underway. So yeah, maybe give us a little bit of insight on that.
Yeah, one of the things that's kind of interesting about our industry is that revenue is calculated when a home takes possession. So when we meet somebody for the first time in a show home and they decide that, yes, we would like to engage with Crystal Creek Homes and build our dream house, typically that process can be anywhere from 12 to 14 months, depending on the time the contract is executed. Selections for the home are all taken into consideration. We dig a hole, and 8 to 9 months later, there is their brand new dream home that has been created. So understanding what our pre-sale test looks like gives us a perfect view into the future in terms of what our revenue is going to be, including our margin and including where we're going to be. That also allows us flexibility to adjust pricing either up or down, go back to our valued trade partners to potentially renegotiate things. So we really do have a great outlook in terms of business versus, well, I wonder if we're going to sell any houses this next month. How is that going to affect us? We have such a large pipeline of pre-sales right now that it allows us to have incredible predictability in terms of what this next year or 18 months is going to look like.
Mm-hmm. It's very good. And I also like to talk about just the dynamics of real estate in Calgary. Where do you see yourself kind of in terms of the build style and the build quality in terms of kind of the hierarchy of like middle class homes, higher end, and custom built homes?
We do a little bit of everything. I will say we don't do any custom homes. We would be primarily known as a production estate builder. So we build very nice products. Some people would say it's luxury. However, in our process, it's a bit unique in our industry in that we have set plans, set options that are all pre-priced, and so we know exactly what our costs are going into a build. And so when somebody purchases a home, we do a margin analysis on that right at that time to say, if we build this home, this is what the margin is going to look like. And we typically are within 1.5% of that at the very end of the build because we already have the pricing already built in from our trades. We are not a builder. If somebody were to come to us and say, I've designed this home, I'd love for you to build it on one of your lots, we would not entertain that because it's not our plan. We don't know the costing. We don't know the complexity of it. We haven't dove into it. So that's not who we are as a builder. Typically in one of our subdivisions, there would be 6 plans potentially that somebody could select from. Of that, within each plan, there may be 8 to 10 options. So it is production estate. We know exactly what our costs are going into every deal.
And I've seen some of the homes you built. They're quite beautiful. What if an investor wants to buy one of your homes? Is that an opportunity for them in the future?
We would say congratulations, and it's the reason that the fund continues to operate. And so we've had many investors that have purchased with Crystal Creek Homes. I would say that we're always kind to those that are kind to supporting our business. And so there's always a little bit of something that we can do for them, whether it be some upgrade options or whatever the case might be. But I would say that that's not the main driver in terms of looking at us and our fund. It's really the performance that we've had over the past 20 some odd years and really our commitment to the long-term viability of the company and the fund itself.
Okay. Well, with that being said, I think it's a good note to conclude our conversation here with Crystal Creek Homes. So I thank you again for joining. And yeah, if you have any questions, please feel free to message us, and we'll be happy to help you.
Thank you very much for having us.